Next is your income method. So with the name itself, I hope you all know what do we mean by income. What is income? Who can tell me what is income? Income. By now you have studied about national income, you all studied about individual income, very normal word which we are using on a regular basis, revenue from operation, okay, you can call it like that. So very simple word which we are using on a regular basis. So this is the same thing, income method. In this method, we are going to calculate the income of country, income in all the forms of the country. Like in value added method, what did we calculated or what did we included? We included the amount or the value of final goods and services which were taking place during the production process. In income method, we will be considering or involving all the incomes of the entire country, income of the entire country. So as usual, first we will see a little bit of a theoretical part, and then we will be moving onwards towards our formula and numerical question. So income method measures national income from the perspective of factor incomes. By now I feel or I hope that you all know what do we mean by factor incomes. Okay, we know what are factors of production or factor services. The returns given to factor services are called as factor incomes. So factor incomes are what? Rent, wages, capital, sorry, not capital, interest. Rent, wages, interest, and profit. These are what? These are the factor incomes of the country. So we are going to include all these four things while computing national income through income method. And in this method, income received by all the residents of the country for their productive services during a year added up to obtain the national income. All the income of that particular year will be included while computing national income under income method. So according to this method, all the incomes that occur to the factors of production by way of wages, profit, rent and interest. Very important. In income method, we are going to involve the income of the country in respect to wages, profit, rent and interest. They are all summed up to obtain national income. And income method is also known as distributive share method or factor payment. As you all, alternative names are very important for us. In the time of exams, there are chances that they will tell you, they will give you a question and they will tell you that find out national income using distributive share method or using factor payment method. So at that point of time, you should know that these methods are nothing but the income method. And at times they will not even tell you, they will not specify that which method you have to use to find out national income. You will be just given the components. You have to identify that those components belongs to which method. Do they belong to value added, income method or expenditure method? So with that, we are going to start with the components of income method. What are the components of income method? So the sum of all the factor incomes earned within the domestic territory of the country is known as domestic income. We know that, right? Domestic income. What is the difference between domestic income and national income? We have already seen. So domestic income, when you sum up all the income of the country, the entire income of the country, it is called as domestic income. And it is known as or represented as which aggregate? So it is represented as NDP at FC, that is net domestic product at factor cost. So now we know value added method represents aggregate GDP at MP. Likewise, income method represents the aggregate NDP at FC. So first component of income method is COF, that is compensation of employees. We know who are the employees. Employees are the people who are going to work for some other people who work for somebody else are called as employees. So employees get some kind of compensation. Since they are providing their services, they will get the compensation. The same thing is mentioned over here, compensation of employees. Now, compensation of employee refer to amount paid to employees by employer for rendering productive services. If I am the employer, you all are my employees and you all are giving me services, your services in my organization, then in return, I am going to pay you some kind of money, that is in the form of salaries, right? So this employer and employee services and money exchange is nothing but compensation of employees. And this will include all the payment and benefits which the employees receive directly or indirectly from the employer. Compensation of employee consists of elements like, so under compensation of employees, we have different things. The employee can receive the compensation of employees in different forms. What are the forms? First form is in the form of wages and salaries in cash. So since you all are my employees, I am the employer, you all are providing me your services, I will give you wages or salaries in cash because you all are providing your services in my organization. So it can be in the form of wages and salaries in cash. So it includes all monetary benefit like wages, salary bonus, dearness allowance, commissions, etc. Any reimbursement of business expenses incurred by the employees will be excluded from compensation of employee. As such, expenses are part of intermediate consumption of business enterprise. If a machinery is being purchased, then that expense will come under what? That expense will come under intermediate consumption. So that will come under value added method. Purchase of machinery, purchase of raw material will come under value added method and not under income. Under income method, we are not going to take any component which we have already taken under value added method, like CIS. We are not going to take purchases, intermediate consumption, sales. Under income method, by the name itself, just understand that we are going to consider or we are going to include just the income of country. That will be included under income method. So income may first component was compensation of employees. How do we give compensation to employees? So first form is wages and salaries in cash. Second form is wages and salaries in kind. Now what is kind? So kind can be in the form of rent-free home, free car, free medical, education facilities. Now say suppose you all are my employees, I am your employer, you all are working for me, you all are providing services to me. So in return what I will tell you, okay Mridula, fine, you can take this car and use it for the official purposes. You don't have to pay anything. I will be paying for the petrol or CNG or whatever it is. You don't pay anything. So this is what, this is here I gave you wages and salaries in kind. This means we are giving you in kind and not in cash. Kind is anything which is useful to the employee. It can be a rent-free home, it can be a car, it can be a medical allowance. Okay, so all of these things will come under wages and salaries in kind. And an imputed value of this benefit should be included in national income. Imputed value. I told you in the last class also, I have explained you what is imputed value. Imputed value is nothing but the imaginary value which is taken on the basis of market value, present market value. This is nothing but imputed value. So it does not include any facility which is necessary for work and which employees do not have any discretion. Example, uniforms to be worn during work only or vehicles to be used for work only. Such payments are intermediate consumptions of business enterprises. So all those things which are given to you for some kind of usage, you all can use it. But there are few things which will not be coming under the income method, which will be coming under the intermediate consumption, like uniforms which we give to the workers to wear on the site. Vehicles we are giving for just work purposes. So there are few things which will still come under intermediate consumption, but wages and salaries in kind is nothing but giving wages and salaries to your employees in a form of kind, like free home, free car, free insurance, free medical insurance, and everything. Then the third part of compensation of employee is employer's contribution to social security scheme. So now social security scheme means what? Employer is worried for his employees, right? So employer will take decisions so that employee can save some money or get some extra money. So that is the decision which will be taken by the employer for its employees. Employer is the person who gives the job. Employee is the person who takes the job. You all are my employees. I am your employer. I am giving you all a job. You all are receiving job from me. So what it includes? It includes contributions made by employer for social security of employees. Example, provident fund, gratuity, labor welfare fund, etc. And the aim of such contribution is to ensure safety and security of life of the employees. So employees' contribution to social security scheme means nothing but providing provident fund, gratuity, labor welfare fund. All of these things are the part of your uh, social security scheme, and social security scheme is always made for the employees by the employer. So basically the first component of income method was compensation of employees. Under compensation of employees, you have three different parts. First part is your wages and salaries in cash. Second was wages and salary in kind. And third is social security scheme. So these are the three subparts of compensation of employees. Compensation of employee is the first component of income method. Under compensation of employees, we have three different forms: wages and salaries in cash, wages and salaries in kind, and social security scheme. Second component which comes after compensation of employee is rent plus royalty, or you can say rent and royalty. Now what is rent and what is royalty? So rent we know. If we take or borrow anybody else's thing which is not owned by us, that is owned by the other person, but you are using it for your business, then in that case you will have to give some certain amount of money to that person, and that is called as rent. What is royalty? Royalty means, say suppose if I have made something very special and I will tell that nobody else is allowed to copy that. Something special, like say suppose I have made some product which is very special, which not everybody can make. Fine, which is not the cup of tea of everyone, which cannot be made by everyone. It is only me who can make this special product. So I will sell this product in the market, and in return I will also say that nobody else is allowed to copy my product. Nobody else can make that product. Legally, I will claim this. So the thing of which I will get will be called as royalty. Once more we will see with the help of an example, but first of all let us focus on rent. What is rent? So rent is the part of national income which arises from ownership of land and building. If you have ownership of land and building and you are providing your land or building to somebody else for using for their business, then in that case you will be receiving rent. So rental income includes both actual rent as well as imputed rent. Actual rent means rent of let out land, and imputed rent means rent of self-occupied property. So I have also already told you that rent can be of two forms. It can be the actual rent, it can be the imputed rent. Actual rent means the owner has actually given the room to some tenant to live and he is receiving the rent. But imputed rent means what? In imputed rent, the owner himself is living in the house, but it's an imaginary value. That means we will ask the owner that if he wants to give the house on rent, then how much will he charge? So say suppose he says 5,000 rupees. So in that case, that 5,000 rupees becomes your imputed value. I have very well in detail explained in the last class what is imputed value. So if you all have to go through that once more, and if still you feel that you have not understood, let me know, I'll explain it once more. So imputed rent of owner occupied houses is calculated based on market value of the house. Royalty. Now what is royalty then? It refers to income received for granting leasing rights of subsoil assets. So basically means what? As I told you that I am making that product. Fine. Now Mridula will come to me and she will say that, okay ma'am, can I also make that product, because I want to explore and make that product and sell it in the market. I will say to Mridula, okay fine, you can sell that product, but whatever income you are generating from selling that product, some part of it you have to give it to me in the form of royalty. This is what is nothing but royalty. You okay, fine, I will give her permission. I will say, okay, fine, you are allowed to make the product which I am making. But whatever income you are generating from producing that product, you will have to give some part of it to me in the form of royalty. That is nothing but royalty. Example, owners of mineral deposit like coal, iron, natural gas, etc. can earn income by giving rights of mining to the contractors. Now, same way, if I am doing the mining of coal, but Mridula and Gokul are coming to me and saying that we also want to do the extraction of coal. We also want to do the mining of coal. But I will say no, the mining rights are only with me. How can I give the rights to you? That rights are only with me. I will not give you. So in that case, what you all will do, you will say that, okay, you will request or you will ask for the permission. Then I will say, okay, fine, you all also start doing mining, but whatever income you are generating, some part of it you are going to give it to me in the form of royalty. So first we saw compensation of employees, then we saw rent, then we saw royalty. The next what we are going to see is interest. Compensation of employees have three things: wages and salaries in cash, wages and salaries in kind, and social security scheme. So till here, I hope you have understood the formula also. This is what the formula is also going to look like for income method, which is represented as NDP at Excel. First component was compensation of employees, which has three subparts. That is wages, salaries in cash, wages, salary in kind, social security scheme. Next, we saw rent, plus we saw royalty, and now the third thing which we are going to see is interest. What is interest now? See, here they have written rent and royalty. Okay, rent and they have put and. But while writing the formula, I will add this plus sign. Okay, I will not write rent and royalty, because at times in the question they might give you rent and royalty like that. But at times in the question they might give you rent differently and royalty would be different. So that is why, to avoid that confusion, while writing the formula only, what we will do, we will bifurcate rent and royalty from each other. We will not keep it as a one word. So even if they are giving our, yes, Gokul, all these four are coming under income method. Compensation of employees, rent, royalty, interest. There are few more left, but as of now, these are the things which are the components of income method. Yes. So rent and royalty, we will bifurcate it. We'll put a plus sign instead of writing and. Okay. Third is interest. So interest, we know, amount received for lending funds to production unit. If now Mridula comes to me and tell me that, okay ma'am, I need loan for 5,000 rupees since I want to start my business. So I will say, okay fine, I will give you 5,000 rupees, but in return you will have to give me interest. When you will repay me with principal amount, that is with 5,000, you will have to give me 2%, 3%, 4% interest. Okay, this is nothing but interest. So it includes both actual interest as well as imputed interest of funds provided by the entrepreneur. So again, when we talk about interest, it is going to include actual interest as well as imputed interest. Interest income include interest on loans taken for productive services only. Now, when we are talking about interest, means we have taken loan. So loan taken for productive services, like we are doing production or production of goods and services, only then that kind of loan will be included under income method. If you are taking loan for personal usage, then that kind of loan will not be, interest will not be included while computing income, national income through income method. Now, actual interest and imputed interest, what it is. We'll talk about actual interest and imputed interest. First scenario, actual interest. There was one person called as Ram. Ram wanted to start his new business. For starting new business, he is going to require 10,000 rupees. Just an example. For starting new business is going to require 10,000 rupees. He does not have this money. So what he plans? He plans to go to a bank and take a loan. When he takes loan, bank says you have to pay 3% interest. So Ram agrees to it and he is okay with it. He says, okay, fine, you give me loan and I will pay you 3% interest on monthly basis. Fine. So now the 3% interest, this value of interest is called as actual. Actually, he is going to pay the interest. Fine. So this is the concept of actual interest. Now we are going to take the second scenario wherein we will understand imputed interest. I hope this is clear to everyone. Okay, I am deleting it. Second, what is now imputed interest? Fine. Again, there is Ram. Again, Ram wants to start a business. For starting a business, he is going to require 10,000 rupees. Now, in this case, Ram has 10,000 rupees with him. Okay, Ram has the entire 10,000 rupees with him to start his business. It might be from his past savings or borrowings or whatever it is, but he has 10,000 rupees to start his business. So now, if he has this enough amount of money to start his business, he will not go to bank to take a loan. Right? Why will he go? The money which he requires to start a business, he already have. Why will he will go just like that and take loan from bank? He will not go to the bank and take the loan. Fine. So now he is not taking the loan. But now, as it is said that we are going to include imputed interest in national income, then how will you come to know that how much interest, how much money should we charge, how much interest rate we should charge? Because now Ram doesn't need the loan. So that is where come imputed value. Imputed value means what? At present, bank is charging how much interest? What is the interest rate? Interest rate keeps on changing. Okay, bank to bank, time to time, interest rate keeps on changing. So at present, bank is charging 5% interest. So now what is the case? Ram will not be paying this 5% interest because he has not borrowed any money from bank. He has not taken any loan from bank. But still we have to consider, or we have to take an imputed value. So imputed value is always taken on the basis of present market value, and at present the bank is charging 5% loan. So if at all the Ram had would have taken the loan, then he would have also paid 5% interest. So this is an imaginary value, this is an imputed value. So this is called as imputed value, and this value is also included in national income. So either it's an actual value which you are actually paying, or it's an imputed value. Imputed value is the imaginary value which is based on the present market value. Is the concept of actual and imputed clear? Any doubt? Oh, so the next part was interest. So interest income does not include. Now when we talk about interest, what kind of interest we are not going to include in national income? First, interest paid by government on public debt, interest paid by consumers. As such, interest is paid on loans taken for consumption purpose. So first type of interest which we are not going to consider or include is interest, any interest which is paid by the government. Second, interest paid by consumers for personal consumption. If I am taking loan from bank to buy a car, then that interest will not be included in national income because I have taken the loan for non-productive activity. For the economy, it is a non-productive activity. Only those interests will be included which are being taken for productive activities, productive services for the economy. Second, we will not include interest paid by one firm to another firm. So ABC organization, this is XYZ organization. ABC organization has taken loan from XYZ organization. So now ABC organization is going to pay interest to XYZ organization. So this interest again will not be included. So interest paid by one firm to another. Third is this. This will also be not included. Now next part which comes is profit. So let us once more revise everything. First thing, compensation of employees. Second, rent. Third, royalty. Fourth was interest. And now next is profit for NBP at X. So now what is profit? Let us understand about profit. Profit is the reward to the entrepreneur for his contribution to the production of goods and services. Now so we are very much thorough and clear with the term profit. What does profit means? Profit is nothing but the returns of risk. Okay, an entrepreneur takes so much of risk. Okay, so for that risk, he will get something in return. So what does he get? He gets profit. So this is the same profit. So it is the residual income which an entrepreneur earns after paying all the factors of production. Profit earned by an enterprise is used for different purposes. So profit, say suppose there are various factors of production used in the organization like land, labor, capital, and entrepreneur. To land we give rent, to labor we give wages, to capital we pay interest, and lastly for entrepreneur we get profit. So say suppose the income generated is 500 rupees. So out of this 500 rupees, 100 rupees is gone for rent, 50 rupees has gone for wages, 50 rupees has gone for interest. The 200 are gone. So remaining is how much? Remaining is 300, and this 300 will be the profit of an entrepreneur for bearing all the risks and uncertainty. So these are the returns to the entrepreneur. Profit is the returns to the entrepreneur, and this 300 rupees is the profit. Residual income is nothing but profit. Now profit again. Oh, wow, so good. Many happy returns of the day. Why did you tell us so late? Hmm? You are going alone.
Alone. Sorry, ma'am, I can't hear you.
We also need birthday party.
Yeah, I will invite the next year. Sure.
Okay. So next when we are in Mumbai, we need party.
Okay, ma'am. Sure.
Okay. Yes. Yes.
Thank you, ma'am. I'll leave at 7:30, ma'am.
Okay.
Yes.
So now profit is again divided into three parts, that is corporate tax, dividend and retained earnings. Okay. Like how compensation of employees had three parts: wages, salaries in cash, wages, salaries in kind, and a social security scheme. Likewise, profit is also divided into three parts: corporate tax, dividend, retained earning. Now what is corporate tax? Corporate tax means when every organization incurs income, every organization incurs profit. So out of that profit, total profit, the organization has to pay certain amount of money as tax. And this tax paid by the organization is called as corporate tax. That's all. So it is the direct tax paid by an enterprise to the government on the total profit earned on it. It is also known as profit tax or business tax. So in the question, they might give you corporate tax, they might give you profit tax, they might give you business tax. You should know it means nothing but corporate tax only. And what is corporate tax? Corporate tax means the total amount, the total profit received by the organization. Out of that total profit, certain amount of money they have to pay as tax. So that tax which has been paid is called as corporate tax. Next comes dividend. What is dividend? We are in accountancy, so what do we mean by dividends? The returns which we give to the shareholders for investing in our companies, in investing in our shares, dividend. So the part of profit which is paid to the shareholders in the ratio of their shareholder is also known as distributed profit. So dividend is also the part of profit, right? When the organization receives profit, when the organization gets profit, only out of that profit they distribute the dividend to their shareholders. So profit dividend is also the part of profit. So that is why the second part is dividend. Third comes is the retained earnings, or you can also call it as reserves and surplus. So what is retained earnings? Retained earnings means the part of profit which is saved, which is not used as of for now, is called as retained earnings. So 500 was my profit, doing all the distributions and all. Now I am remaining with 100 rupees. I'm going to keep this 100 rupees aside, and later on in future, if required, I will be using that 100 rupees in the organization. So this 100 rupees is what? Nothing but retained earnings or reserves and surplus. So that is also the part of profit. Retained earning is also becoming a part of profit only, because from profit only you are going to save that money. You are going to keep the retained earnings. So retained earnings. So it refers to that part of profit which it keeps as reserves to meet unexpected contingencies or business expansion. It is also known as undistributed profit, saving of private sector, reserves and surplus. So we have three alternative names for retained earnings. So at times they will directly give you in the question as retained earnings. At times they might give you the alternative names like undistributed profit, savings of private sector or reserves and surplus. Fine. So that was the next part. That was profit. Profit got divided into different three subparts: corporate tax, dividend, and retained earnings. Next part is surplus. So we'll come back to operating surplus later on. First, we will see the last component of income method, that is mixed income. Now, what is mixed income? See, we bifurcated four types of income. Okay, we bifurcated four types of income, that is rent, interest, profit, royalty, compensation of employees. Fine. Or rent, this many things we came across. Now, what is mixed income? So, just imagine there is a person who is a doctor. Okay, there is a person who is a doctor. He has his own clinic or dispensary. He has his own clinic. He is not taken that clinic on rent. Okay, he has its own clinic. It's his own clinic. So he doesn't have to pay rent to anybody. Fine. So no rent. He is working alone. He is working alone in that clinic. So while he is treating the patients and when he is receiving fees from patients, he is not liable to pay any factor of production because he himself is working in that clinic. He doesn't have any other people to work for him. So that means he is the only one who is getting the entire salary. Then you can say whatever profit he is receiving, that is also in hand. It's in his hand. You don't have to distribute it to anyone. So the one person is getting all the kinds of income. Rent is also his, salary is also his, profit is also his, wages, kind, everything is his. So the one person is receiving multiple types of income. So in that case, in under which category should I put this doctor? While calculating national income, from which category? After, we saw so many different components of income method. In which component of income method should I put to this doctor? Because clinic is his, so he don't have to pay rent. But of course, we are going to consider imputed rent because we are going to involve or include imputed rent. So that we will be doing. So this imputed values of everything, rent, salary, profit, where should I put it? Under which category should I put? Under which component should I put? I don't have any component, or I can, secondly, I cannot put him under every category. I cannot put him under rent. I cannot put him again under profit. If I do so, then the numbers will be repeated, right? Numbers would be repeating. So that cannot be done. So what I will do? So I will make a new whole category or a component called as mixed income. So any person, any individual who receives income in multiple formats, in multiple forms, then that person will directly go under which part? He will directly go to mixed income. So this is what is called as mixed income. It is the income generated by own account workers like farmers, barbers, etc. and unincorporated enterprises like retail traders, small shopkeepers, and etc. It is the term used for any income that has elements of more than one type of factor income. So mixed income involves all those things, all those people who have multiple types of income, who cannot be put under one category. So mixed income arises from productive services of self-employed persons whose income include wages, rent, interest, and profit. And these elements cannot be separated from each other. Example, a doctor running a clinic at his residence. So mixed income means all the varieties of income is received by only one person, and mostly those who are doing their small businesses or those who are self-employed on a small scale, those people will come under the category of mixed income because they are receiving all forms of income by themselves. Wages are also received by them, rent is also received by them, interest is also received by them, and profit is also received by them. So we are going to consider the imputed value and put them under the category of mixed income. Now there are few reasons what are the reasons or why we have come across with the category mixed income. So accounts of most production units are not available to the estimators of national income. Moreover, due to different accounting practices, it is not possible for the estimators to clearly identify the component of different factor incomes. Of course, while calculating or while computing national income using income method, the calculator, the person who is calculating, he will be getting confused that under which heading should I put this person? Under which heading should I put this person? Under which component should I put this person? Because he is getting rent also, wages also, interest also, and profit also. Every income is received by himself alone. Then under which category should I put? So that is why they came up with the fifth category, that is mixed income. Another reason, when total factor payment can be estimated but cannot be segregated into separate heads, there are additional factor payment known as mixed income is added. We cannot segregate or we cannot bifurcate under any head. We cannot put him under COE, we cannot put him under rent, we cannot put him under royalty, interest or profit because he is receiving everything by himself. So I cannot clearly clarify that under which heading should I put him. Should I put him under COE? Should I put him under rent, royalty, interest or profit? So that is why we came across with the new factor payment called as mixed income. This factor payment is also known as mixed income or self-employed, as this problem arises mainly in case of self-employed people like doctors, chartered accountants, consultants, and etc. So mixed income is also called as self-employed people, self-employed. Why? Because this problem arises in the case of those people who are self-employed. Those who are self-employed. So this problem arises with those people. So mostly the people who will go, the category of people who will go under the company are people who are self-employed. Okay. So that was our next category. So last small part, operating surplus. What is operating surplus? You'll be having a 2 marks or 1 mark separate question on operating surplus. What is operating surplus? So operating surplus is nothing but the mixture of rent, royalty, interest and profit. So operating surplus is another term used in factor payment. It refers to the sum total of income from property, rent, royalty, interest and income from entrepreneurship. Operating surplus arises in both private and government enterprise. So when we talk about operating surplus, it can be related to private companies, it can be related to government companies. But it does not arise in the general government sector as it works with the motive of social welfare. Its basic aim is to operate for the benefit of public. So in income like rent, interest, profit are nil in general government sector. So general government sector means what? Mostly when we talk about operating surplus, it is going to be related to the firms only, private firms only, because it will not be coming under the government sector mostly because government sector are for providing welfare to the people. So this operating surplus is majorly related to the private sector. Now, just to revise, income method is represented by NDPFC, aggregate NDPFC. First component which we saw was compensation of employees, under which I said it is divided into three parts, that is wages and salaries in cash, wages and salaries in kind, social security scheme. plus next I said rent, under rent plus I said royalty. Now rent, under rent and royalty I said the same thing, that we are going to include both actual rent and royalty plus imputed rent and royalty, plus then next thing which I said was interest. Again, interest also we will include both actual rent plus imputed interest. Next was profit, and last one was, sorry, first of all, profit is also divided into three parts. Profit is again divided into three parts: corporate tax, dividend, and retained earnings. And last one is, yes, okay, Kokol, it's okay, you can leave. Last one is mixed income. Go enjoy, have fun. Okay, last one is mixed income. So mostly under mixed income, who all are going to come? The people who are self-employed. Those people will come under the category of mixed income. Fine. Now at the end, I said operating surplus. So what is operating surplus? Just don't have to take COE. You don't have to take mixed income. Remaining all the four you have to take. That becomes your operating surplus. That means rent plus royalty plus interest plus profit. This is nothing but your operating surplus. You just have to remove COE and you have to remove mixed income. Remaining rest all remains the same, and that is your nothing but mixed income. Fine. So this here we discussed all the components of income method. The next part is precautions of income method while making or while preparing computing national income. What all precautions should we take while that is there? And then we are finally going to start with the sums. So before going ahead, if you want, we can take 10 minutes break. 7:15 it is, 7:25 be back. We will complete this precautions and we'll solve 2 to 3 sums and then we'll wind up at the session. Okay, let us continue. Mridula, are you there? Let us start. Okay. So we saw all the components of income method, the meaning of all the components and where are they going to be used. Next part is the precautions which you have to take while computing national income using income method. What all precautions are you going to take for while computing the national income? So first, transfer incomes. Transfer incomes like scholarship, donation, charity, old age pension, etc. are not included in national income because such receipts are not connected with any productive activity and there is no value addition. So transfer incomes, at the very beginning we understood that there are two types of income. It can be a factor income and it can be a transfer income, wherein we said that transfer income is never included in national income, be it be by any method, value-added method, income method, or expenditure method. We are never going to include it. Only factor incomes are included while computing national income. Transfer incomes are not included. Transfer incomes are the unilateral incomes or the unilateral transfers, which is the one-sided transfer. You are just giving the money, you are just transferring the money, but in return you are not getting any kind of goods and services. That kind of income is called as transfer income. Second, income from sale of second-hand goods will not be included in national income as the original sale has already been counted. If they are included again, it would lead to the problem of double counting. So this also we know in the last time value-added method also we have seen this precaution. We are not going to include second-hand sale of second-hand goods, just only if there is any commission or brokerage charged while selling those goods and services, only then that commission or brokerage will be included in the national income. Otherwise, the sale of second-hand goods are never included in national income, computing national income. Third, income from sale of shares, bonds, debentures, etc. will not be included because those are not the current flow of goods and services. As I have already told you in the last class, investments are of two types: capital investment and financial investment. Capital investments are those investments which are done on machinery, raw material, equipment, tools, building, land, etc. Financial investments are those investments which we do on securities. Securities like shares, bonds, debentures, equity, preferences, etc. So when we study economics, as it is not related to only this chapter, but when we study economics, we never include financial investments. We only include capital investments. So here in the precaution also they have said the same thing. We are not going to include the sale of shares, bonds, preferences, debentures, equity, etc. We are not going to include it. But again, if there is any brokerage or commission on this financial investment or financial asset, then that will be included. Only the brokerages and commissions, but not the sale of preferences, equities, or anything such like that. So in the question, they will give you one thing that income received from the sale of debentures. Then you should know that that kind of incomes are never included. That kind of income is not going to be included while computing national income through income method. Next, we always have to avoid capital gains. Now, what are capital gains? So, capital gain refers to the income from sale of second-hand goods like old car or sale of financial assets. So, the both of these things, combination to both of these things, it is called as capital gains. Means sale of second-hand goods and sale of financial assets is called as capital gains. Any income arising from such transaction is not a factor income as these transactions are not productive transactions and do not add to the current flow of goods and services in the economic. So what do we mean by capital gains? Capital gains means sale of second-hand goods and services and sale of financial assets. Although brokerage or commission charged on this sale of second-hand goods and services and financial assets would be included in the national income. Then windfall gains. Windfall gains are also not included while computing national income. What are windfall gains? Windfall gains means the income which we have received from gambling, lotteries, horse race, by doing all of these illegal activities. So any income which has been received by doing illegal activities will again not be included while computing national income. Fifth, imputed value of services provided by owners of production unit will be included. We know that. All the imputed values are going to get included under national income. It be imputed rent, royalty, profit, interest, wages, salaries, whatever it is. All the imputed values are going to get included. Payment out of past saving is not included, like debt duties, gift tax, interest tax are not included in national income because they are paid out of wealth or past savings and do not add to current flow of goods and services. If I have done savings in the year 2018 and if I am doing the transaction in 2023 by using this money, then in 2023's national income it will be not included because that income I received in the year 2018. It was not received to me in the year 2023. So whenever I will prepare the national income for 2023 to 24, I am not going to include this kind of income. So any expenses, any transaction made from the past savings will be not included while computing national income. Fine. So this was all the theoretical part which we saw with the national income method. Now we are going to, I'm going to write down all the formulas, important formulas, which you can note it down, and then finally we can start with the sums. So first of all, very important, income method is denoted with NDP at FC, that is net domestic product at factor cost. Formula is compensation of employees plus rent plus royalty plus interest plus profit and plus mixed income. Fine. This is the basic main formula to calculate NDPFC. Next, COE or compensation of employees includes wages and salaries in cash plus wages and salaries in kind plus contribution to social security scheme. Okay. Then when we talk about rent, royalty, interest, profit, mixed income, we will include both actual values plus imputed values. Fine. So rent, royalty, interest, profit, mixed income, both actual value and imputed value. Then when we talk about profit will include three things: corporate tax. So if directly profit is given to you in the question, then you will take that amount which is given to you in the question. But if directly profit is not given to us in the question and dividend and retained earnings is given, then in that case you will first of all have to find out profit and then you have to total all the three things and then whatever the amount you get, we will put it in the formula. So corporate tax plus dividend plus retained earnings. There are other names also. Other name of retained earnings is reserves and surplus. Other name of corporate tax is business tax or profit of corporate. Then what else is remaining? Done. Operating surplus. Operating surplus. So operating surplus is equals to rent plus royalty plus interest plus profit. And there is one more formula last. Income from domestic products accruing to public, that means government sector, is equals to saving of non-departmental enterprise plus income from property and enterprise to government. That's all. These many formulas we have to remember for solving national income using income method. Okay, note down note down all the formulas. And here also it will go in the same way for solving any practical question. First of all, you will be finding NDPFC. Once you have found out NDPFC, you will go to the aggregate which has been asked in the question. Write down the formula. Once you have written it, let me know. We will solve 2 to 3 questions. Should I scroll down? Remaining part. Done? Perfect. Let us solve few questions then now. First question. Calculate national income. Question printing has some problem. Wait a minute. Just give me 2 minutes because otherwise you will not understand. Just 2 minutes. This is the question. You have to find out. You have to calculate national income. So, do you remember what was the national income's aggregate? You have to calculate national income, and the national income ka aggregate is NNP at FC. Okay, NNP at FC. So first of all, what we will do? First of all, we will find out NDP at FC. Formula I have given. Once you find out NDP at FC, you have to go to the next aggregate which you have to find in the question, that is NNP at FC. Mixed income is given to you. Old age pension. Old age pension is what? Old age pension is, you can say, it comes under social security scheme. Dividends are there, operating surplus is there, wages and salaries. Here there is wages and salaries, profit, employers' contribution to social security scheme. So now you can see the heading is directly given to you. So should we take old age pension? No. As I have said, if the direct heading, direct component is given to you in the question, then you have to take that. You don't have to take the sub parts of it. Like compensation of employees, if it is given to you directly in the question, then you will take that. You will not see whether if wages and salaries in cash is given, wages and salaries in kind is given or not. Net factor income from abroad, consumption of fixed capital, this is nothing but depreciation. Everything is given to you in the question, just we put it in the proper place, proper. Start solving. I'll give you 5 minutes. 5 minutes after, I'll just ask if you are getting it or not. Let me know if you have any doubts. I'm here only. 2140. Hmm, small mistake. NFI is minus 10, huh? Want me to solve? We'll solve together. Oh, so first of all, we will be finding out NDP at FC. Oh, did you miss this? NIT? NIT is also there. Huh? I don't think so there is any news of NIT. Is there? You have to go from NDPFC to NDP, NNPFC, NDPFC to NNPFC. We don't need NIT. When we need NIT, when we have to convert MP and FC. There is no MP in the question. I'll solve that. So first of all, we will be finding out NDP at FC. Formula of NDPFC is compensation of employees plus rent plus interest, rent plus royalty plus interest plus profit plus mixed income. Fine. Now see if compensation of employees given to us directly in the question. So directly to it is not. I cannot see compensation of employees directly in the question. Next, what we have to find out? We have to find out that whether wages and salaries in cash is given or not, wages and salaries in kind is given or not, and social security employers' contribution to social security fund is given or not. So we can see wages and salaries is given to us, that is 500. Employers' contribution to social security is also given to us, that is 50. So we got the first part, that is compensation of employees part. For next, we have to see whether any rent is given to us, actual rent or imputed rent. So I cannot find out any kind of rent over here. So 0. Royalty, nowhere, 0. Interest. Is there interest given to us in the question? Again, no. So 0. Profit, directly profit is given to us 400. Right? Profit is given. Dividend is given. Wait. When they have given us directly profit, so we will not take dividend. We'll direct take 400. Plus mixed income. Mixed income is given, so yes, 200 is given. So calculate how much are you getting. How much? Calculate. 500 plus 50 plus 400 plus 200. 1150, 1150. So we got NDPFC. Now what we have to find out? We have to find out NNP at FC. So NNP at FC is equals to NDP at FC. Now net to net, no need to change anything. Domestic to national. To go from domestic to national, what do we do? To go from domestic to national, what do we do? Very good. Plus NFIA. Rest remain everything as it is. PP as it is. FCFC as it is. NDP at FC, how much we got? 1150 we got. Plus NFIA is how much? Minus 10. So 1150 plus minus 10. 1140. This will be the answer. Very simple. Any doubt? Did you get the sum? Huh? Very simple. First of all, you found out NDPFC. Everything was given. Compensation of employees directly it was not given, but it was given to us in the form of what? Rent and wages and social security contribution to it. Then rent was not given. Royalty was not given. Profit was directly given to us in the question, so we took it as it is 400. Mixed income directly given to us, we took it as 200. We got total 1150. Now from we got NDPFC, we have to the question asks us to find out NNPFC. So NNPFC is equals to NDPFC. NDPFC means net to net, no changes. Domestic to national plus NFIA, P to P, no changes. FC to FC, no changes. So NFIA minus 10 is given to us. So plus minus minus 114. Right? Now you try one sum. Every sum has that problem. Give me 2 minutes. Again, I'll just. Solve this sum. You have to calculate NDPFC by using income method. So NDPFC is nothing but the aggregate of income method. That is what you have to find out. Compensation of employees is directly given to us in the question COE. Operating surplus is given to us. Operating surplus is mix of what? It is mix of rent plus royalty plus interest plus profit. This is nothing but operating surplus. So that is also given to us directly in the question. Mixed income is also given. Saving of non-departmental enterprise and income from property and entrepreneurship government administrative departments. We have to add both of these things. That formula also I have already given. Fine. Start solving. See what is the answer you're getting. Yes. Solve. Calculate NDPFC. Now what is the formula of NDPFC? NDPFC formula is, see, if you write rent, royalty, interest, profit individually, then also it is fine. If you just write operating surplus, then also it is fine, because operating surplus the formula is what? Rent plus royalty plus interest plus profit. So if you're writing it differently, then also it is fine. If you're writing it as a one word, then also it is fine. But you have to remember. Now in this question, they have directly given you operating that you don't have to find out profit, rent, interest, and everything. But at times in the question, everything will be given to you differently. So in that case, you'll have to club, add everything, and then that becomes operating surplus, right? So what is the formula to find out NDPFC? Compensation of employees, rent, royalty, interest, profit, plus mixed income. Compensation of employees directly given 3,000. Operating surplus means rent plus royalty plus interest plus profit. So that is also given to us directly 2,000. Mixed income directly given 1,000. Savings of non-departmental enterprise is always added. So 4,000. Income from property and entrepreneurship to government is also always added. So add 5,000. That's all. This is what you were supposed to do in the entire question. Yes, COE plus OS plus MI. Very good. Solve it once more from according to your understanding. These last two one are very important. They will come for confusing you. Saving of non-departmental and income from property and entrepreneurship. You should know both of these things gets added. No, do the calculation properly. 3,000 plus 2,000 plus 1,000 plus 4,000 plus 5,000. How come it is 6,000? Nah, 15,000. Very good. Correct. There is one small sum. Do that also, then we will wind up for today. Very small. Fifth one. Calculate NDPFC by using income method. NDPFC is nothing but your income method, so you don't have to find out any other aggregate. You just have to find out NDPFC. Everything is given. Write the formula. See what all things are given. See what all things, if CO is not given, then what part of CO is given. If profit is not directly given, then what part of profit is given. Accordingly, put up everything and write, solve the question. Very small, quickly, 5 minutes. 18,820. Let me check. Small mistake. Do the calculations perfectly. Very simple. First four operating surplus is directly given to you. This is what? Operating surplus, rent, wages, interest, profit, mixed income you have to add, saving of non-departmental you have to add, income from of property entrepreneur you have to add. Very simple, very easy. In DPFC is equals to COE plus rent plus interest plus profit plus royalty plus mixed income. So wages is given. Wages is nothing but the part of COE. Rent is given. Interest, profit, mixed income is also given. Saving of non-departmental we always add. Income from property and entrepreneurship to government administrative department we always add. That's all. Very simple. Still mistake. What happened? 2100, 5300, 1500, 1100, 5590, 2410, 8000. Add it. 10, 5, 10, 14, 15, 16, 17, 18, 19, 20. 8, 10, 15, 20, 21, 22, 23, 24, 25, 26. 26,000. Very simple. Get it? Understood? Fine. Tomorrow also we'll solve 2-3 questions more and then we'll go for the next method. We'll start understanding the formulas, start remembering the formulas. In the first week it's fine, still we'll do it properly by referring to the notes, but on the next week I want we are not supposed to go to the look at our notes. Fine. Go through everything. Still if you have any doubt you can come up with it in the next class. We will get it clear. Okay. Sure. Bye bye. Thank you. Good night. Take care.